Today is Tuesday, July 29th, 2025, and it was kind of a weird day for me. My actual investing brokerage account was down 2.43% today, while my Roth IRA was up 3.28%. So, kind of a divergence going on here, but most likely it's because my investing account is heavily dependent on Robinhood, while my Roth IRA is heavily dependent on AMD. So those two accounts are diverging a little bit today, but it's okay. I'm still outperforming the NASDAQ. Speaking of the NASDAQ, it was down 0.14% today, but now it's up 0.12% overnight. And year to date, it is up 10.45%. And my account year to date is still almost at 92%. If we go over to my Roth IRA, year to date, it is up 76.59%. So everything's still good over here. And there were a handful of topics that I wanted to touch on today in this video. But first things first, you guys already know I got to give an update of my transactions. But it doesn't look like there's too much to update. I think I've already shown you guys most of this. I did buy some more lemonade. I did roll my Palantir covered call, bought some more lemonade, my Robinhood covered calls that I opened, and then MAA, which is my REIT that I've been building a position in, and of course my upcoming dividends. Let me scroll down just a minute. Those are my open option positions right now. But let's get to my main positions. So those are my equity balances right now. Let's change to percentage change for today. So of course my top three positions are down, and it looks like Pepsi is up today. So the market is kind of risk off maybe. SoFi was actually up huge today. I want to say it was up, let's see. Yeah, almost 18% today. It might have been more than 18% because Robinhood doesn't really show the exact prices on this chart at least. But then it gave up all of its gains on the overnight market and also in the aftermarket. The after hours market. So it was up 6.6% to close, but now it's down over 6% on the overnight market. So basically flat today, which is quite surprising, but it does kind of fit along this trend that has been going on during this earnings season. Let me change this a little bit. There we go. That's a better view. But this trend that I've been seeing, and I kind of talked about in a previous video, where this earnings season, it seems like a lot of stocks are either not moving as much or stocks are going down. So Google, for example, it did slightly go up, but it wasn't as big of a pop as I expected it to be. Well, maybe not me, but most people expect Google to pop on earnings because that's usually how it's gone. And it was kind of like a quote unquote easy trade. But other than Google, I want to say Chipotle was actually down. Yeah, it was down pretty bad after earnings. And of course, another stock that reported earnings today, actually, a stock like Visa that I only saw headlines of the earnings. I didn't actually dive deep into Visa earnings, but I want to say they actually did report good numbers, but the market for some reason is reacting negatively. And of course, a stock that I own personally, PayPal, also reported some very good numbers, and fundamentally it is quote unquote undervalued, right? I want to say it's still a 10x price to free cash flow, because I think their free cash flow per share is almost 7 and the stock price is around 70. So that's about a 10x free cash flow or a 10% free cash flow yield. So on paper, PayPal is undervalued, but it's been undervalued for quite a long time now. Since 2022, it's basically just done nothing. And of course, we have Spotify today that I did not look at their earnings either today, but for some reason, stock is acting negatively or reacting negatively to earnings. But then we take a look at a stock like Starbucks that reported earnings today. And I want to say I saw a headline that said Starbucks has gone down in same store sales for 6 quarters straight. Right, 6 quarters in a row, same store sales. Say that 5 times fast. Same store sales have been going down for 6 quarters consecutively, right? But for some reason, the stock is up almost 5.5% on the overnight market. And my little conspiracy theory that I have is I think a short squeeze is happening in the market, right? Or at least a money rotation out of the stocks that have already been doing good into some stocks that have been lacking, right? So, for example, Starbucks, people already expect same store sales and just numbers in general to be down. So the downside risk, I guess you could say, is already priced in, which is a similar story to Nike, where people already knew Nike has been struggling. So a lot of that downside has already been priced in. And what do you know? Nike this past month has been performing tremendously. And speaking of short squeeze, Kohls has actually made the news recently of being a potential short squeeze candidate. If we take a look at its performance this past month, I mean, we're talking a stock that used to be $8.50, tagged almost $15. And I want to say, if we take a look at the advanced chart, because I hate how Robinhood doesn't really show you the exact numbers. Yeah, it pushed well above $20 a share. And I personally think that this could possibly be, this could finally be that situation or that scenario that I've been talking about in some of my other videos, where consumer related stocks start outperforming the market, at least for a short period of time. But it actually seems like specifically clothing related companies possibly could see some sort of a short squeeze. And Kohls is just one example. If you look at the charts of American Eagle, and speaking of American Eagle, they've also made the news recently because of all this controversy. Yeah, if we take a look at the news that's on Robinhood, this Sydney Sweeney lady, I'm not really sure who she is, but apparently there's this controversy on the internet surrounding American Eagle and some of their marketing. But apparently Sweeney launched a meme rally in American Eagle, according to this one headline, and American Eagle soars 18%. This was like 5 days ago. If you take a look at the candlestick charts for a lot of these companies, you'll notice a similar pattern to where there was a breakout recently because of all this controversy, short squeeze with Kohls, the American Eagle controversy, and some other stocks like Levi's that kind of trade similarly. So if you look at the chart, it is very similar to the one for Kohls. So I just get this feeling that there's going to be this massive rally, even more so than the one that we've already seen in Kohls and Levi's and Nike, etc. Because VFC, I'm not sure how the stock is going to react to earnings, because it just seems like the stock constantly goes down. But they do report earnings tomorrow morning, and I'm very curious to see how the market reacts, because as of right now, if a VFC can finally turn things around and get the market to react positively to tomorrow's earnings, for sure we're going to see this massive rally in a lot of these clothing related stocks. But also, if you take a look at the charts, you'll notice that there is a gap on the charts for a lot of these companies like Kohls and I want to say American Eagles, and I think Levi's filled that gap already. But yeah, I do think now is finally that time that I've been talking about in a lot of my older videos, where clothing stocks and consumer discretionary finally catch a bid. And the final thing that I wanted to talk about today is actually this picture that I've been seeing all over X, which is Vlad's face is on Forbes. Now, it's kind of a running joke in terms of like X and just the like the finance space in general, and the running joke is anytime your face is on the cover of Forbes, that is the top for your company, right? And I want to say that I forget the chick's name. There's a chick that basically scammed the business community. Oh man, I mean, I know I seem stupid for not remembering her name, even though she's super famous, but she used to like dress up like Steve Jobs, and it was in the healthcare space. You guys can comment down below, whatever. Yeah, I forgot. But also SBF, he was also famously on the cover of Forbes, and it's basically like this running joke of anytime your face is on the cover of Forbes, that is basically the top in terms of your stock price. And I do think that a top is near for Robinhood stock. I still think that there is a possibility for Robinhood to tag 120 after earnings. So like I said, it's either going to go to 120 or all the way back down to 80. But it's okay. I'm prepared for whichever option. Obviously, it's going to hurt pretty bad because my account is heavily reliant on Robinhood. Half of my portfolio is in Robinhood, and it is my number one position, of course. So it is going to sting a bit, but I still think there is a possibility to wipe out those last minute shorts. And it ties back to that short squeeze that I've been talking about, that it feels like it's been building up in all of these retail stocks. So who knows, maybe along with those stocks, Robinhood also tags 120 before that big decline. The market sentiment in general also feels kind of neutral, maybe like slowly starting to become bullish. It doesn't feel as overbought as like, let's say, all the way back in 2021 when people were paying thousands of dollars for pictures of rocks. I don't think we're at that level yet, but I do think we could get there. So Robinhood stock possibly could see 120. Solana, I think, might see 200 again. And we have that one final push upwards before 2026, 2027, when we see possibly another correction or big decline in the market. And most likely my account, the top for my account, at least for the next couple of years, will probably be somewhere between $250,000 and $300,000. I'm going to have to be on my P's and Q's. I'm going to have to manage my risk and be very cautious of what I do, because I do have some margin. And of course, my account is very aggressive. Half of my account, like I said, is in Robinhood. My risk a lot better than I have in some of these previous declines. But yeah, guys, I know it's easy to get super bullish during these moments, but consider this a warning. I do think 2026, 2027 will see another big decline. It's just, I don't know what's going to cause it.